Bank Negara Malaysia pressed pause on a key rate hike, keeping the overnight policy rate at 2.75% in its first Monetary Policy Committee meeting of the year. This bucked consensus estimates that had been expecting a 25 basis point increase. In a statement, BNM said the country's growth in 2023 is expected to moderate amid a slower global economy, likewise the headline and core inflation figures. However, BNM added that headline and core inflation will remain elevated amid lingering demand and cost pressures. While it expects growth in China to improve once the current COVID-19 wave subsides, it believes growth outlook remains subject to downside risks, such as an escalation of geopolitical tensions. The central bank's decision to hold the interest rate steady comes as a surprise, as both Bloomberg and Reuters surveys of economists expected an increase of 25 basis points to the key rate. According to BNM, the balance of risk to the inflation outlook is tilted to the upside and remains highly subject to any changes in domestic policy on subsidies and price controls, as well as global commodity price developments. The central bank says the country's growth in 2023 will remain supported by domestic demand and household spending, which will be underpinned by sustained improvements in employment and income prospects. BNM says today's decision allows the MPC to assess the impact of the cumulative past OPR adjustments, given the lag effects of monetary policy on the economy. The central bank says that at the current OPR level, the stance of monetary policy remains accommodative and supportive of economic growth. Malaysians must not neglect moral values, ethics and humanism in the nation's journey to strengthen its economy, says Prime Minister Datuk Seri Anwar Ibrahim. Anwar emphasised the three core components in his speech mandating the Malaysia Madani framework on Thursday, in addition to good governance as being critical to ensure sustainable, holistic development. The Madani framework emphasises 6 values, namely sustainability, well-being, creativity and innovation, respect, confidence and courtesy. He described the concept of a humane economy that will reject the unbridled capitalism, which he said was partly practiced by the government previously. Anwar also touched on the unity government's role on how it will continue to utilise the strengths of the partners regardless of political blocs or ideologies. However, the PM says that all weaknesses must be stopped, in particular pointing out administration methods which take advantage to enrich a small group of people. The government, he said, could save around 5 to 6 billion by fixing the weaknesses related to procurement, pointed out by the National Audit Department in the past, and billions more by improving the strength of enforcement bodies in terms of transparency and execution. He finished by saying that the steps to be announced in Budget 2023 will help bring it back to basics. IGB REITs net property income for the fourth quarter of FY22 rose by 12.8% year-on-year to 105.64 million, as revenue also improved by 25% year-on-year to 148.72 million ringgit. In a BOS filing, IGB REITs said the higher total revenue and MPI were mainly due to the lower rental support provided to tenants during the quarter, arising from the economic reopening and improving retail sales of tenants. IGB REIT also declared a distribution per unit of 2.46 cent for the fourth quarter of FY22. This raised its full-year DPU to 9.86 cent as compared with 6.03 cent for the year prior. For its full-year report card, IGB REIT saw a 52.8% year-on-year rise in MPI to 420.25 million, while revenue improved 39% year-on-year to 556.4 million from the 399.5 million posted in FY21. Touching on its prospects for the financial year ahead, IGB REIT says that it still expects the landscape to be challenging in light of rising costs of living and doing business, and as such remains cautious on its prospects. Its sister REIT, IGB Commercial REIT, in contrast, saw a 14.15% year-on-year drop in MPI to 27.27 million, despite revenue improving 7% year-on-year to 49.44 million. Even with the softer MPI, IGB Commercial REIT declared a higher DPU of 1.49 cent, raising full-year DPU to 3.42 cent. For its full year, IGB Commercial REIT's MPI tripled to 113.62 million, while revenue surged 257% to 190.43 million versus 53.37 million previously. Looking forward, IGB Commercial REIT says that it is constantly driving engagement with tenants to create meaningful relationships, which it says has proven successful given the higher average occupancy rate of its 10 buildings to 77.5% as at end 2022. The Malaysian Automotive Association forecasts that total industry volume, or TIV, will decline by 9.8% in 2023 after surpassing the 700,000 mark in 2022. Annual TIV is expected to decline from 720,658 units in 2022 to 650,000 units in 2023, mainly due to the expiration of the sales tax exemption in March 31st, 2023, according to MAA President Datuk Aisyah Ahmad. She shared that the government may not extend the sales tax exemption since it has done so for 3 years due to the COVID-19 pandemic. She adds that with many economists and analysts expecting global growth to slow down this year, coupled with rising raw material costs, it makes consumers more cautious about buying cars. Higher annual TIV in 2022 was attributed to pent-up demand for new vehicles, especially in the first half of 2022, and was further boosted by the authorities' decision to allow buyers with confirmed bookings within the deadline to register their new passenger cars. Of the 720,658 units recorded in 2022, Berdua recorded the highest at 282,019 units, followed by Proton, Toyota, Honda, and Mitsubishi. Both passenger cars and commercial vehicle segments recorded very high sales growth for the year. Real household spending in Malaysia is expected to grow by 5% year-on-year in 2023 to reach 1.1 trillion, slowing down from the 11.8% year-on-year growth in 2022 as recovery effects fade and growth normalizes, says Fitch Solutions. Fitch also noted that households and businesses have already begun to draw down on their savings considerably since April 2022. Also, while Fitch recognizes that easing inflationary pressures will support consumer spending, a potential scale back of subsidies and price controls by the newly elected government will put pressure on consumer spending patterns going forward. Fitch said high-frequency data indicates steady growth in consumer confidence, while the latest retail sales data suggests that there is a slight slowdown. Nonetheless, consumer confidence has largely been steady, reflecting a positive consumer mindset despite inflationary pressures in certain commodities such as food and fuel, weighing on low and middle-income households. Fitch forecasts the Malaysian economy to grow by 4% year-on-year in 2023, slowing from 8.4% year-on-year in 2022 on the back of high private final consumption and domestic demand. Its economic growth forecast is aided by steady employment and falling consumer price inflation.